WestUrban Developments, and I'm joined here by my colleague Elisa Zan. And yeah, we've had the pleasure of working on a number of projects with Integrated Equities, and it's a pleasure to be here to talk further about our program. So a little bit about WestUrban. So WestUrban is a builder of apartment buildings throughout Canada. We're Vancouver Island based with offices in Campbell River, Nanaimo, and Victoria, where I'm based out of. So we're a builder of apartment buildings. Our scope is really across the country, so everywhere from Vancouver Island all the way to Ottawa, Ontario. Although within that, very heavy Western Canadian and British Columbia presence. So here's a slide talking about our founders, Sean Roy and Terry Hoff. Notably, Sean has been in this business for over 20 years as previously CEO of a major apartment building builder, built over 10,000 units prior to founding WestUrban with Terry Hoff. And Terry, in turn, has a lot of diversified senior leadership experience in pulp and paper industry, as well as oil and gas. So really, our program is, as I mentioned earlier, we're in the business of building apartment buildings, and what we do is we build apartment buildings with third-party private equity. So this is obviously where the connection with Integrated Equities and everyone on the line here. So what WestUrban's model is in particular is we buy future development land, we entitle it, and so that's the rezoning, development permit, building permit, getting it ready to be shovel ready. The next stage is we lock in our construction financing, and that's typically in the 75 to 80% loan to cost range. And then we bring in third-party private equity, third-party private equity. So if there's a 75% construction financing, we'll bring in 25% investor equity, and that would be in our terms capitalizing the project. Then we build out our project and we lease it up, and at that stage we exit the project, and I'll talk about that later here. So we can dig in a little bit more into our model. So every project is its own limited partnership. WestUrban is the general partner, and the limited partners are our investors. And then in terms of investment profit, once the project is complete and stabilized, we have really two exits. Exit one, we can secure long-term CMHC financing, and then between the general partner and limited partners sharing the rental income, or we can sell the asset to a third party and similarly sell the profit or share the profits between the general partner and the limited partners. Here is a slide just kind of summarizing or showing the repayment waterfall. So when in an example where we sell an apartment building, we take the sale proceeds. First, we pay the construction lender. So using the example previously, the 75% of the budget cost. Second, we'll pay the investors' equity. So that's the 25% of investment equity. What's left is the profit. And then in our waterfall, we distribute half to investors and the other half to WestUrban. So this is really very interesting, and it's kind of like, what's unique about WestUrban? Why WestUrban? So I spoke about what we do, building and selling, or building and leasing apartment buildings, and then how our model works, limited partnership with private equity investors. What's unique about us is our scale. So at any one time, we have 1,500 plus units under construction. This represents 10, 15 units under construction at a time. Our space in the purpose-built rental is our specialty is 4 to 6 story wood frame, kind of 100 to 250 units. That's our space. So to accommodate such a large deal flow, we have a large land bank to accommodate that. So we always have future development properties ready to go so that we maintain our 10, 15 units under construction at any one time. but also we have a really large team to facilitate taking land from acquisition all the way through to construction and sale. So we have our own land acquisition and development team. This is a team of um, former city planners. They're really good at being able to look at a piece of land and saying, what's reasonably the most we could build on this, and it lets us assess properties, very accurately, very quickly. And when we're making the buy no buy decision, um, we have architecture firms or firm that we work very, very closely with, and they are really tied in tight with our development team, so that we're building buildings that are not only meet the market, but also that our construction folks are very, very comfortable to build. And so we're always fine tuning that. And by having a firm that we work so closely with, our movement through the entitlement process is really as fast as you can reasonably be. On the construction side, very big into vertical integration. So we have ownership interest in a number of key subtrades. For instance, concrete foundation. So a lot of the early stage where maybe projects are most at risk of being over budget or delayed, ownership structure in there. Really, that doesn't give you below market pricing or anything like that. But what it does is it gives you, reliable access to trades, fair pricing, and good quality work. And so that's it on the construction side. Once the building is built, we have an in-house marketing team. So really helping us lease up the building. We have an in-house property management team that actively leases up the building and and manages it. And then we have the capital team, which is the team that I lead, which in the prior part puts together all the debt and the equity for the project. So it's really that big team approach that we have that gives us, I think, a speed and cost advantage and quality advantage. And that ties into the next point here, our track record. So we've built 18 projects, sold 13, and we're proud to say for our investors, we've provided an annualized return, an average annualized return of 25%. Some of our big sale exits, they're typically to large buyers, so private equity funds, REITs, large family offices. Connecting to what I said earlier about our design build, we have really good relationships with these groups that we typically sell to. And we're always in contact with them. So we're always asking them, what is the latest that you're looking for? What is the latest that you're not looking for? And adjusting our build accordingly so that we can always make sure we're on top of the latest trends in meeting the market. And what's a unique aspect of the WestUrban investment model is when we ask an investor to invest, the investment amount is fixed or finite. So, and that's in, maybe contrast to some other GP/LP investors. We don't ask our investors to co-sign on to the guarantee of the construction loan. And if there is a cost overrun, we would be responsible for that. We don't ask for a subsequent cash call during construction. And then finally, transparent communication. So as I mentioned earlier, pretty broad team, the team I lead on the capital side, we always are there for our investors. We have a formal quarterly reporting on the project of our status, as well as the quarterly financing statements, so you can, really have some comfort of how the project is progressing. But also, more importantly, me, Elisa, the rest of the team, we're always here to answer any investor questions, either as you're about to enter into a project and you have questions, during a project, and even after a project. So this is the track record I spoke about. I see a typo, probably should be 18 projects completed. So we'll update that for the next presentation. But as I mentioned, returns that we're really, really proud of, in a 25% average annualized return for investors. And here's our track record. So this is a number of the projects that we've completed. You'll note here, very, very, heavy British Columbia presence here. And then what I thought I would do is we talk about an opportunity that we worked with recently with Integrated Equities, and that was a project in Salmon Arm that is, I think, well, not I think I know, fully capitalized and ready to launch next month. So, and we just maybe run this as an example of a project. So this is a project in Salmon Arm. The proposal is one building, 140 units, 6 stories, wood frame. So as I mentioned earlier, that's really our sweet spot. 4 to 6 story wood frame, 100 to 150 unit multi-res. Um, and in this case, 5,000 square feet commercial unit on the ground floor, 140 parking stalls. Of note in this market, 0.5% vacancy, almost 10% population growth from 2016 to 2021. So very, very favorable demand and supply rental metrics. Um, Not unique to Salmon Arm. You find that throughout the country, especially British Columbia, but it does give comfort for the project in Salmon Arm. And then here are some of the basics. And this is a very, very um, very typical WestUrban deal in terms of the valuation. So we have here a budget of 36.5 million, appraised value of 44, construction loan 28.6, investment equity almost 8 million. And then and based on these numbers, and these are all third party verified or confirmed. So appraised value comes from third party appraiser, project budget confirmed by third party quantity surveyor, construction loan locked in prior to collecting any of our investment equity. And our forecasted return based on these numbers is 28.1. I have to say there's a lot of variables that go into this. So it really is a forecasted amount, but you have an idea based on our track record returns and then the numbers on here, kind of what the ballpark we would expect. And then in terms of the investment duration, this one about 18 months is what we're forecasting. That is one aspect that investors should be aware of when they're investing in um, private equity construction projects is the illiquidity aspect of the investment for a period typically 2.5 years on average. This one a little bit shorter. And I think that concludes our presentation. I will stop sharing here.